Thank you for watching this video. Do like, share, comment and subscribe to this channel for more information. Weekly open trap exposed. The strategy bank don't want traders to know. Every single week, millions of traders lose money within the first 1 to 2 hours of the new trading week. Not because the market is unpredictable, but because banks use the same weekly open trap to mislead traders. Today, I will be exposing it step by step, and after this video, you will never fall for it again. Don't skip any part of this video, watch it to the end, because at the end of it, I'll be showing you something crazy about what these institutional traders used to do. I am Mr. Joshua that help traders trade the smart way. Most traders have no idea that the weekly open is the most manipulated zone of the financial market. It set the tone for the entire week. But the problem is the first direction you see is almost always a lie. And if you don't understand the trap, the market will take your money before you even start trading in the week. Now, how then can we be able to spot this trap? The first market open for the new week is not for you to rush and enter into it. Now, retail traders immediately try to catch the early move, which is not supposed to be so. The bank take advantage of these false directions and then begin to liquidate retail traders. Now, this first move hunt liquidity from the last week, because some traders will forget their trade on in the week, and then this real direction begins and it moves the opposite direction without even the trader now knowing, because before they wake up from their sleep, it has already started going. Now, you need to mark weekly open lines. You need to mark weekly open line. Now, you see me, I'm having my open line, my daily open lines. You see it? I have my daily open line. And then you need to identify fake pushes. You need to identify fake pushes. Now, this is my open line. You see it? Coming. Go back. Now, this is open line. It helps you to know where it's opening from. See, it's an open line. It's an open line. It's an open line. So once you have seen the open line, you identify the fake pushes. Now let me show you how to do that. Now this is 1, 2, 3, 4, 5. Perfect. Perfect. Look at what happened. This is Sunday. It opens, go down, and then fake move. You see the fake move here. Look at the fake move going up. Now traders will think that that's the direction for the week. That's a fake move. That's a fake move. Now, this is what we call liquidity sweep. They begin to pack liquidity. That's traders that left their trade. They'll begin to see price going the wrong direction, and then all of a sudden you see reversal happening to the weak trend. Look at it. See it, reversal happening downward, down to this particular place. And after which you look at it, see what happened. Market makers what? Oh my god. Market makers what? Take it now roughly upward. Now, once the market open, you need to watch the market. You need to trade what you see. You need to trade what you see. Now, banks need liquidity to move price. So you need to trade what you see. So the weekly open become their playground to take out stop loss, collect orders, and misdirect retail traders. That is what they do. Now, this boosts their income. This boosts their income, and they are always in a rush for them to um, take out retail traders. Are we together? Now, before you do anything, before you do anything, you must be able to spot all these things. Like for example, now this is a new week. Now this is what is happening. You need to s- draw. You should have a horizontal line like this. Horizontal line like this. Now, after the break of this horizontal line or upward, that's when you're supposed to trade. Make sure you understand this. Don't just trade. Make sure there is actually a break of this particular structure that we are seeing. And then when there is the break should not be a signal for you to enter first. No, you should wait for confirmation. Wait for confirmation, because the break can be a trap. The break can be a trap. So you wait, because there must be a first push, which most of the times the first push is always a trap. Now, if price shoot up aggressively, expect it to fall down. If it shoot upward, if you shoot down aggressively, expect it to what? Shoot up. Now keep your chart very simple. Keep this strategy very simple. Are we together? Keep it very simple and wait for a pullback at this particular zone that I just draw. Now these are what we do every opening of the week. Now you wait for the stop hunt and the liquidity shift to happen. Now you must wait for it to happen. This is where price spike above or below the last high or low of the week. Now, whenever you see a sudden spike taking out the last week liquidity, that's your first confirmation, and that's the end of the trap, because market makers will definitely what? Give trap. That's the end of the trap. Now look for break of structure, fair value gap. You look for break of structure or fair value gap or retest. That is, I put it in a simple terms, pullback. You enter at this particular place, you enter at this particular place. Whenever you see this particular horizontal this thing, and then you see a break coming back to test back before it goes continue the move or like this. Now that will be the best way for you to what? To enter. And definitely you will see your displacement candlestick. Definitely you will see your displacement candlestick, and then please make sure you put your take profit and your stop loss. Now if you are going for a buy from this particular place up here, you're going up here, your stop loss should be at this particular place. If you are going downward, your stop loss should be what? Should be up here. Now that is how you should be able to trade. That is how you should be able to trade. Now if you trade with this particular um trading strategy that I just share with you, it will be very, very difficult for you not to be able to catch the weekly move. It will be very impossible. I say it again, it will be very impossible. Now look at what happened here. 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 Look at it. It went for a buy for a long time. That week entirely. There was a break. Look at what happened. Let me shift this. Look at this place. Look at this place. There was a break downward and a break upward back, and then it came back and continued moving, even though it was not moving very strong, but it was moving going what? Going up. Now you need to be patient. You need to be patient. You don't have to what? You don't have to rush and enter. No, you have to be what? You have to be patient. Look at it. You have to be patient. Look at the same method happen here again. You have to be patient. You don't need to rush and enter in the market. You just have to be patient. Now that you understand exactly how bank manipulate the weekly open, your next step is to learn how the London Open complete the manipulation. How the London Open complete the manipulation. And that is where most traders get destroyed, and you must avoid it. Now, I will be making a video concerning that. All what you need to do is to check um you check the videos and you will see it. Definitely it is there. That's the opening London opening. But my next video that I'll be doing, my next video is going to be on Monday trap expose, how um, market makers usually um, destroy retail traders on a Monday, specifically Monday, Monday. Now, if you find this video so helpful, subscribe to this channel and click the notification bell. Share this video with your family and friends. See you in the next video. And don't forget, I remain Mr. Joshua. I teach traders how to trade the smart way.